Good morning. I'm Ellen McSherry, Chief Operating Officer at the NJCPA. Welcome to IssuesWatch with Ralph Thomas. Ralph, who's seated to my far left, is the CEO and Executive Director of the NJCPA. And Ralph's guest for today's show is Ed Guttenplan, who is seated to my immediate left. Ed is the managing shareholder at Wilkin Guttenplan and is the 2017-18 President of the NJCPA. Welcome, Ed.
Thank you. Glad to be here.
Welcome,
Thank
Ed.
you.
If you have any questions at any point during the hour, we invite you to submit them in the questions tab or tweet them to us at #IssuesWatch so that we may address them throughout the broadcast. So today's agenda, we're going to start with the NJCPA updates. We're going to give you the results of the bylaw results. We're also going to do New Jersey issues and updates covering the election, the state budget, the economic outlook, and the triennial. And for the national outlook, we're going to talk about tax reform, national advocacy issues, and the results of some recent AICPA surveys. So I'm going to start with the bylaws vote. The NJCPA members were recently asked to vote on proposed changes to the NJCPA bylaws. The changes include a proposal to open membership to a broader category of non-CPAs throughout the expansion of the associate member class. So Ralph, can you please tell us a little bit more about the proposal and the results of the vote?
Sure, Ellen. Thank you. The proposal was vetted and approved by the NJCPA Strategic Planning Committee and our Board of Trustees. Members were informed about the proposed changes beginning in March with an article that appeared in our magazine, and the vote took place between May 15th through June 9th. More than 20% of eligible fellow members participated in the vote, and we want to thank everyone who did vote because more than 2,600 votes were cast, and that's nearly 3 times as much as have participated on previous bylaw votes that we've had here at the Society. As a matter of fact, 2,617 votes were cast, 971 voted yes, and 1,646 voted no. Therefore, the changes will not be implemented. Member concerns about the associate expansion came through clearly and distinctly. Since the vote was an all or nothing, there were additional bylaw amendments that were also voted down, and these were primarily cleanup items to our bylaws. Many of those changes, as I mentioned, were cleanup or administrative in nature and will be resubmitted to the membership in the next 6 to 12 months.
Thanks, Ralph.
Thank you.
I'm sure we might be getting some questions on that, so feel free to tweet them or email them in. So Ed, you're in week number 3, I think, as NJCPA President. I know you had the opportunity to address the people who were attending the convention last week, and you really had talked about your goals for the next coming year. I'd like you to share them with our entire membership at this time.
Sure. I'm excited and delighted to be the president of the NJCPA and carry on the rich history that we have in the profession and in New Jersey. As I thought about my goals of 3 things I wanted to try to accomplish, what I really wanted to do was take the strategic plan that we have worked so hard on, the Strategic Planning Committee and the staff, and find a way to leverage that with some of my own passions and ability to effectuate change. So I identified 3 areas that hopefully can leverage some of what is in the strategic planning, the strategic plan. The first is engaging the next generation CPAs, something I'm infinitely passionate about. I think we need to reach down and bring up those young leaders in the profession. All too often we wait and ask for them or look for them to raise their hand, but rather we need to reach out and bring them along with us. We have an Emerging Leaders Council that is part of the committee structure of the NJCPA, which also is going to be a key element in helping us mobilize the next generation. Maybe at this time we should listen to the Emerging Leaders Council Chair, Jay Loretta, explain the role of the council and the initiatives they'll be focusing on.
Hi, I'm Teresa Hinton, and I'm here today with Jay Loretta, who's about to begin his 2nd term as chair of the NJCPA Emerging Leaders Council. Hi, Jay.
Hi, Teresa.
Thanks for joining us. So you used to be called the Young CPAs Council. Why the name change?
We felt that young CPAs as a descriptor was a little too exclusionary. With the change to Emerging Leaders Council, we feel that better describes who we are as a council and the idea that we want to empower others to follow in our footsteps by challenging the status quo and giving back in a meaningful way.
Great. Will you still be serving CPAs who are under 35?
We're focusing on career stage now rather than age. So while we expect that many in their first 10 years of their career will be under the age of 35, we're also here for the CPA who got to start later in their career.
What do you say to millennials and new graduates who don't consider themselves emerging leaders?
I would say, there's many ways to be a leader. Try not to get too caught up in the label. Use us as a guide, follow in our footsteps, and try to find a way that's meaningful to you to give back to the profession.
Great. What will the council be focusing on this year?
Right now we're focusing on serving the NJCPA's new strategic plan, which involves collaboration, education, and in response to that, the council now has 3 subcommittees. One that's focusing on Connect, which is the NJCPA's online community. Another one that's encouraging collaboration at the chapter level. And a third that's inviting members from other firms and other professional organizations to get more involved.
Thanks, Jay. If you're interested in learning more about the Emerging Leaders Council or about getting involved, please update your profile at njcpa.org/volunteer. Thank you.
As part of our continuing commitment to the next generation, we're going to continue to stress the importance of taking the CPA exam and for maintaining your license. All of us can help that process by encouraging those in our firms or in our industry organizations to pursue that exam and pass it. The next area of my second area of focus is going to be elevating our advocacy efforts. We're going to be talking more about this, but it's really helping the profession, and it's going to help you in industry and in private practice, help your clients create, help us and your clients create a better business landscape in New Jersey. And the last area is great member services. We hope to hear from more of you and engage with more of you. We'll be reaching out, Ralph and I, with some initiatives, especially to the smaller firms, so that we can hear your thoughts and how we can move the value proposition for our members further along.
Thank you, Ed. So this spring, the NJCPA accepted nominations for its first Diversity and Inclusion Impact Awards. The awards were designed to recognize CPAs who are diverse and have achieved professional success, people who champion diversity in the accounting profession. The NJCPA is pleased to recognize 27 people with the award, including the 2 gentlemen at this table. So congratulations to both of you.
Yeah, thank you, Ellen.
You can view the list and read more about the winners at njcpa.org/diversity. And feel free to reach out to any of these winners to get more information on how they are achieving the diversity and inclusion initiatives in their particular firms or companies. At this point, I want to turn it over and introduce the New Jersey Issues and Updates section. And I'm going to turn that over to Ralph, because he is the guru of New Jersey.
Well, I don't know about being the guru. I wish I had the crystal ball that would tell everything. But as you all know, we had the primary elections on June the 6th, and the Democratic candidate for governor is Phil Murphy, former ambassador to Germany. And the Republican candidate is our current Lieutenant Governor, Kim Guadagno. We recently hosted a number of Q&A sessions with some of the candidates, and in particular with these 2 candidates, where they shared their positions on a number of issues that were facing the state. And we want to just share some of the highlights of those sessions with you this morning.
My campaign is simply about one thing, and that is affordability. We need to wrestle the highest property taxes in this country to the ground. Now, there's others. We want to audit Trenton, save a lot of money, stop the waste. You got to give them confidence that their money is being spent in the way it should be spent. And I've suggested through the audit and independently elected Attorney General, you have to give them hope that their taxes are actually going to go down in the most taxed state in the country.
The problem, I would say humbly, in New Jersey is less related to exactly what tax rate is on X or Y. It's the simple concept that the premium to live here or do business here keeps going up, and the basket of stuff we get back is shrinking. I think a low-cost tax environment is not within our future.
The interesting part about it is that I'm the only major party candidate who is against increasing taxes.
I'm not sure we can be a AAA rated state anytime soon, but maybe we can stem the tide and start to crawl back. I also want to be known again as the state that funds women's health programs, that signs the sensible gun safety laws, equal pay for equal work, college affordability, a state that acknowledges climate change is real and puts in place a series of things that actually deals with it.
If somebody tells you they're going to fully fund the pension, in ballot question or not, and also when you fully fund the pension, you have to fully fund the health care benefits, they're lying to you.
The first recommendation in 2005 is the same first recommendation in 2017. The state must meet its side of the deal. Period. A deal is a deal. These are our people. I find that unacceptable.
Your view on a millionaire's tax?
If you ever need any evidence that I'm prepared to spend political capital to tell it like it is, it will be that's got to be on the table along with everything else. There's just no choice. The math doesn't work otherwise.
There's been a lot of conversation about bringing back the millionaire's tax.
Not from me.
Well, okay. And as you can tell by the video, both the Lieutenant Governor and Ambassador Murphy both have some interesting views on what direction they want to take the state in. So we will continue to reach out to both of these candidates to understand their views and what they intend to do to drive the state, hopefully to be more competitive. Now let's turn to the state budget. As you know, if you don't know, June 30th is the deadline for New Jersey to pass a budget. If that does not happen, technically the state should shut down and only essential services would be rendered. What's been interesting about this session is that it's been fairly relatively quiet except for the last couple of days where some issues have emerged. One of the things that has come up in Trenton and there's been a lot of talk about a proposal called the Lottery Enterprise Contribution Project. And this project is, proposal is to allocate proceeds from the New Jersey State Lottery to Public Workers Pension Fund. We recently, or I said we, I had recently spoke with Carol Hedinger, Executive Director of the Lottery and former NJCPA President, about this proposal. Here's an excerpt from what she had to say on this matter. We understand there's a proposal to allocate a portion of the New Jersey State Lottery proceeds to the state retirement system. Can you briefly explain this proposal to our members?
Well, first let me correct that. All of our annual revenue would be transferred to support the pensions if this proposal is enacted. Briefly, the idea is that the lottery has an asset value. This asset value has now been set at $13.535 billion. And by putting that value on the pension plan's balance sheet, it increases their overall asset value by that $13.5 billion. And those assets are what are used to calculate the annual required contributions for pension funding. So by increasing the value of their assets, it reduces the amount of funding that's required on an annual basis, which results in an overall savings. I can't quote how much that savings is, but it's enough of a savings to make this worthwhile. The important part to know is that it's a 30-year term of transfer, and our revenue will go directly to pensions on a monthly basis over that 30 years. The value of us as an asset will be amortized over 30 years so that at the end of the term, when we revert back to Treasury, we'll have eaten up all that value down to zero. The additional asset value in saving money in the annual contribution frees up money in the general fund that then can be used for other purposes.
I want to thank Carol again for providing some clarity about this proposal because it has a lot of moving parts to it, but it seems like it may be something that may provide a real viable solution to the pension obligation fund. One of the other things that has been percolating in Trenton over the last couple of days has been discussion on school funding. So we'll hopefully talk a little bit later about that and some of the other initiatives that have been cropping up regarding the state budget. But stay tuned, keep your fingers crossed that we will have a budget passed by June 30th so that services the state won't shut down.
We're really lucky to have someone like Carol in the position that she is in, and who
Absolutely.
can give us this information. And just for the viewers' information, Carol did do a longer talk with us, and they can listen to the full talk on the website. I think we have, did we show the URL? Okay.
Yeah. And certainly if our viewer audience have further questions on this, we can help answer them and utilize Carol to get to address the questions that they have.
So living and doing business in New Jersey, as we all know, many pros, many cons. We recently surveyed NJCPA members about their feelings on the New Jersey economy. Well, this is what we've gotten back. We had about 43% of the 500 respondents feel the state's economy will be about the same a year from now. 33 believe it will be worse, and only 24% think it will be better. When asked what would stimulate greater economic expansion in New Jersey, the top 3 ideas selected by the respondents were: number 1, reduce property taxes, cut the gross income tax across the board, and provide additional tax incentives to companies. The top 3 concerns that respondents cited with regard to operating a business in New Jersey were: number 1, the state's budget deficit and credit rating; 2, the implications of health care reform; and 3, the outcome of the gubernatorial election. I really think, with the election coming up, everything's up in the air. Things that we thought were moving in one direction could actually move in a different direction, so it's hard to really gauge, and I think I could understand where our members are coming from with the way that they answered the survey.
Well, sure, uncertainty plays a big part, and has always been one of the big issues here in New Jersey, even when legislation has been passed that subsequently it may be appealed, repealed, or pulled back, or postponed, if you will. So I'm not surprised at those results as showing uncertainty, especially when you compare them to the national results,
Exactly.
which we'll talk a little bit more about later in the program.
So Ed, you're a managing partner of a firm here in New Jersey. What do you think the NJCPA and its members can do to help improve the economic climate in New Jersey?
That's a great question. It's probably a twofold answer, at least twofold. The first is supporting advocacy, having a seat at the table so legislators know what the important business and economic issues are that we're facing and our clients are facing in an effort to move them along. And I think secondly is our ability to advise our clients as their trusted advisors on how to navigate the political, regulatory, and business landscape in New Jersey. We're uniquely positioned to have their ear and be able to guide them, and I think we're well equipped with our technical background and understanding of the impacts of legislation to advise our clients navigating going forward. So we're actually in a really unique position to be able to guide them as they navigate this going forward.
And I think at our annual convention in Atlantic City, where we had the business roundtable, I think Senator Oroho said it best, that the views and opinions of CPAs are well respected in the state legislature. So as we will be coming out with, I think, a number of surveys to take a pulse read from our members, we strongly suggest that you participate in those surveys, because the legislature and lawmakers and the administration really value the input of our members, because, as I tell them, our members touch pretty much every taxpayer constituency and industry here in the state of New Jersey. So if you really want a good read of what's going to happen or what the impact of a proposal or public policy, the CPA Society is someone you ought to reach out to.
You know, I will add, we had several of our young CPAs at the convention, and they sat in on the business roundtable, and they said it was extraordinarily informative for them to understand the business landscape. And you translate that to our general membership, the more we know from programs we put on with respect to advocacy, the better we're positioned to now advise our clients.
Absolutely.
So that was a great program.
Right. It received a lot of kudos down there. But again, our future surveys, we hope that you'll take the time. We'll try to make them not be intrusive, but to really get to the heart of what we're trying to extract information from.
So we do have a question, and I'm going to give it to Ralph on the gubernatorial race. What revenue-generating ideas will emerge with a Democratic governor? Question mark. Millionaires tax? Question mark. Sales tax on professional service? Question mark. Yes to all the above?
And as the ambassador said when we hosted him for the Q&A, everything's on the table.
He did.
So yes, those two issues, the millionaire's tax is a matter of fact, and I was going to talk a little bit about this later on in the program, but since the question came up, the millionaire's tax proposal has been put on the table by the Senate President, President Sweeney, and the Senate Chair of the Budget Committee, Paul Sarlo. This is an issue that is being not just a New Jersey issue; it's being looked at in a number of states, as well as increase in sales tax or sales tax on professional services. I think last year about 13 states introduced proposals to do a sales tax or either include CPAs where they were previously excluded. So obviously, we're concerned about a millionaire's tax or surcharge, if you will, because those are the kinds of policies that will contribute to the outward migration of New Jerseyans. We've seen it before with some significant citizens leaving the state, and that's why we went forward to try to push the elimination of the estate tax. And now that has been eliminated or is in the process of being eliminated, we're hearing conversations from individuals talking about coming back. So to look at a millionaire's tax would be something that would, I think, just be detrimental to New Jersey and its economy. I think what we ought to be focused on, and the candidates ought to be focused on, is how do we grow our way out of this? And by that, it's not taxing or increasing taxes. It's how do we stimulate business growth, particularly amongst the small business community. And that's something that our members have been working on in tandem with the New Jersey Business and Industry Group with a task force to look at what kinds of tax credits or initiatives can be implemented that would help small businesses flourish here in New Jersey or expand. When you think about, we have close to 300,000 small businesses. If we could just get 10% of them to hire one more person, it's 30,000 people. And I think the other piece of that too, in tandem, is in addition to trying to retain businesses here and attract new businesses here, is we need to do something from a work development standpoint. We currently export 31,000 high school seniors each year to go to college elsewhere. And chances are the vast majority of those individuals are not going to come back to New Jersey. So where New Jersey used to have a very rich talent base, we're seeing that diminish a little bit. And to add insult to injury, many of the students don't come back or individuals don't come back because of the fact that the affordability or lack of affordability here in New Jersey. So I think those are the things that we have to work on as opposed to saying what kind of taxes should we increase. I think going that route will be detrimental. I think we need to really focus on how we can attract more businesses here and how we can retain the existing businesses here and inspire them to invest in New Jersey.
Thanks, Ralph. So Ed, why don't we go back to you a little bit more about what issues we are following. I know Ralph touched on some of them, but
Sure. There's many issues we're following. You could find them on the NJCPA advocacy section of the website. There's a number of them, and you really should read through them and see what's coming down the pike. The few that we'll just mention here. The first is the gender equity bill. That bill was vetoed by the governor in 2016, but it looks like it could come up again. We're watching that. And the NJCPA and our CPA firms have all been in the forefront of the issue of equal pay for women and supporting gender equity. The trouble with this bill is that it has the potential of encouraging onerous lawsuits, and the reporting requirements related to it are also onerous. So our concerns are twofold in that respect with how it relates to the gender equity bill. The second one we're watching is the minimum wage. The proposed legislation is to increase the minimum wage to $15 per hour, and our concern is the harm it will have to small businesses and the state's economy. As Ralph said, if we can get one more employee from the businesses in New Jersey, we could add 30,000 employees. If the minimum wage goes up, we're fearful that employers will cut back on employment, and a lot of other unintended consequences that we're trying to educate legislators on as a result of what could happen if the minimum wage goes to 15. The last of the three that we're following is the anti-arbitration bill. This bill would bar state agencies from entering into contracts with businesses that require individuals to give up any right or remedy by the laws of the state. Meaning you can't include arbitration clauses in your contracts that you must litigate. And at first glance, it may appear to be public policy, but we're concerned about it. Arbitration tends to be a solution that's faster and cheaper, and long drawn-out processes, expensive processes, perhaps can hurt the economy and hurt businesses more than the arbitration approach. So we're trying to educate legislators on those aspects of these bills.
And on a couple of those bills, particularly minimum wage, we have seen some results from out in Seattle, Washington, where they went through a similar process to increase their minimum wage, I think, to $11 an hour. And the subsequent year, they saw unemployment go up. Or they saw, one of the other reactions were individuals saying, you know, instead of working a full 40 hours, I want to work less hours because some of the subsidies that they were entitled to, they would now lose because of the minimum wage go up. So there are some unintended consequences, and I think, you know, we believe, as you spoke, in a living wage, or that people should be able to have a living wage, but we really need to make sure we peel back the onion on a lot of these proposals to see what some of the unintended consequences may be, and make sure that we look at who, with their other jurisdictions that have gone this route, what's been the impact that they've had. And again, on the gender equity bills for the profession, we've really been out there. We now have 2 CEOs of Big 4 firms that are females, and when you look at the graduates coming out of accounting programs today, almost 51% are females. So gender equity is certainly something that the profession supports. We've come a long way, but we still have you know, some ways to go. And I think we're a leader in that regard. One of the other things, and I mentioned it a little bit earlier, was the millionaire's tax, the proposal that's come up, and also school funding. These things have been chatted about, as we understand it, behind closed doors, and there's some interesting proposals out there. And we really could see some action taking place in next week on those matters as well.
And we'll keep our members informed as we get that information.
Right.
Well, thank you both, Ed and Ralph. We'll be exploring more about living and doing business in New Jersey in our September-October issue of our magazine, NJCPA. Some of the topics will include a comparison of the gubernatorial candidates, an analysis of the impact to date of the Transportation Trust Fund relief bill, CPA's recommendation for improving New Jersey's credit rating, very important, the potential impact of a change in New Jersey's governing party on business and tax issues, some of what we talked about here today, a review and analysis of key legislative issues the NJCPA is tracking, and a New Jersey Voter's Guide to the State Tax Policy by former New Jersey Treasurer Andrew Sideman Erstoff. Before we move on, we do have another question, and it's along keeping talent here. There's an intense battle for young talent in the accounting and finance profession, partly because so many young people leave the state and don't return. Just exactly what you said, Ralph. The question is there anything that the state can do to encourage these young people to stay in New Jersey?
Well, I think one of the things is provide more funding to support, you know, post-secondary education. You look at the statistics, New Jersey ranks #1 in the kind of support it provides for K through 12, but when you get to post-secondary education, we drop off miserably. I think average for K through 12 is somewhere around 19 to 20,000 per student, And when you look at post-secondary education, it drops down to about between $3,500 and $5,000. So that's why we lose a lot of students.
So the
to
first
state.
step you're saying is to keep them in college here.
Well,
and then-
yeah, absolutely. If you keep them in college here, I think we have a better shot that they will stay here. Again, companies look when they're thinking about their investment in New Jersey or whether they want to relocate to New Jersey. One of the key things that they look at is the talent pool.
Right.
And so, and I think the other piece of that is some, I mentioned earlier, is workforce development type training that we have to combine. It's just not enough to increase one's salary, but how do we prepare the workforce for the future in terms of, you know, some of the things that we're seeing that where technology is taking over. We need to be able to, you know, have programs that can take people who have a certain set of skill sets and elevate them to the next level.
On the other end of the spectrum, and this is somewhat of a rhetorical question, as baby boomers approach retirement age, why should they consider remaining in New Jersey? Just moving across the border to Pennsylvania could offer significant real estate and retirement income tax savings. True.
Absolutely, but we've taken some measures of that with the tax reform package that was passed last year. It did increase the exclusions for pensions.
Yes.
So not quite, you know, and we'll have some work to go because if you go over to Pennsylvania, Pennsylvania does not tax pension income at all. So I think we've made some strides in that, in terms of that. And I think we really need to focus on the assets that New Jersey has. And I think if we can, and I say we, if the legislature can address and solve the school funding issue, that feeds into one of the biggest issues, which are property taxes.
Yeah.
So if we can get folks on board and get a consensus to work towards that, I think those will be some reasons why people will want to stay in New Jersey.
All right. Thanks, Ralph. So very important to all of us as CPAs, this is the end of the triennial. And it's a reminder to all of us that the end is December 31st, and we have a brief video to discuss the CPE requirements and the license renewal process.
Hi, my name is Alyssa Pierce, and I'm the Education Operations Manager here at the New Jersey Society of CPAs. This is just a reminder that December 31st, 2017 marks the end of the current triennial period. That means it's time to renew your license. To renew, look for the notice from the New Jersey State Board of Accountancy in the mail sometime in November. If you haven't received it at that time, or if your address has changed in the last 3 years, please contact the State Board immediately. Remember, the NJCPA is here to provide advice, answer questions, and offer CPE courses. However, it's a State Board of Accountancy that regulates the profession and is in charge of license renewal and CPE requirements. So keep in mind that renewing your NJCPA membership does not renew your CPA license. To renew an active license, you must earn 120 credits between January 1st, 2015 and December 31st, 2017, with a minimum of 20 credits per year. If you have more than 100 credits going into your third year, you must still earn 20 credits in 2017. 4 of your credits must be in a live New Jersey Law and Ethics course presented by a board-approved sponsor. If you do not have 120 credits by December 31st, 2017, you should consider placing your license on paid inactive status to avoid severe financial penalties. Once you've made up the credits, you can then reapply for active status.
Remember, you can easily track all of your CPE with New Jersey NJCPA's CPE tracker. And the NJCPA staff is always ready to answer any questions you might have. Just either email us or call us, and we can steer you in the right direction. In other State Board of Accountancy news, their audit of the previous triennial was delayed. You may or may not know that. Therefore, they're asking all of us, all CPAs with New Jersey licenses, to retain their CPE records from the 2012-2014 triennial until January 1st, 2018. So please don't throw them out. Obviously, if you're using the tracker, we have it here. If you're not, I would encourage you to use the tracker. The State Board is also proposing to increase the license renewal fee from $90 to $135. We'll keep you apprised of that and where that's going also. They're also in the process of reviewing the CPE regulations that are due to sunset at the end of this triennial meeting, December 31st, 2017. And we'll provide, like I said, updates on all these issues as soon as they become available. We attend every State Board meeting, so we have the information firsthand to disseminate to you. Before I turn it over to Ralph, we do have one more question.
Sure.
Going back in the gubernatorial race, it says the Trenton leadership have never found a tax they did not like, as evidenced by school, municipal, library, open space, sales, income, real estate transfer, et cetera, et cetera. When will the NJCPA announce their endorsement for governor?
That's a tricky one. Historically, the society has not really endorsed candidates. We supported people. I think what our goal is in the gubernatorial election and also in the general elections is to provide information. Provide information to our members about what the candidates are thinking about in terms of their objectives. That's the role that we see that we play here in New Jersey, is to make sure that our members are informed about what the candidates are thinking, what their proposals are, to take the state forward and make it competitive and bring it back.
Okay, thanks, Ralph. So Ralph, I'm going to let you continue here. Let's talk about peer review and what's going on in that.
Well, first of all, because of June 30th is another little deadline where individuals who are not performing functions that come under the auspices of peer review, they need to fill out that form. And the form can, I believe we have it on our website as well, the form. The rollout of the AICPA's new PRIMA system has been somewhat problematic, and that may be an understatement. So we're asking our members and firms to be patient as issues are identified and they're resolved. But the goal at the end of the day is to improve the peer review process, make it more real time. And so with the rollout of the system, there have been some bugs and things. And our staff here at the Society, our peer review team has been working closely with members. And we're also going to be in dialogue with AICPA to see how we can perhaps get some of the bugs worked out in a more timely and efficient process.
All right. Thanks, Ralph. Okay, we're going to move on to our national issues and updates section, and ask Ralph to continue with that as we talk about the national tax reform.
Certainly. You know, if you think New Jersey's been interesting, all you have to do is look down the turnpike a bit to Washington, D.C., and that's been an interesting scenario. And Ed will talk a little bit about our Hill visits there, but I think one of the things that we found out from going there, healthcare and the reform of the ACA is a key issue. Mm-hmm. And if that doesn't get done properly, perhaps we won't be seeing some tax reform. Is kind of one of the underlying messages we heard when we were down at our Hill visits. At our recent annual convention, Gene Marks talked a lot about ACA and the impact it has not only on a national basis but also on a state basis. And he shared the following facts about the timing of health care reform. Mitch McConnell wants a vote by July 4th, and again, we'll see whether that's doable or not. You'll need 50 votes in the Senate, and as of when we were starting to talk about IssuesWatch, there were 3 moderate Republicans. Now there's a 4th one that's emerged that we've heard in the news today. So they need to at least recapture 2 of those in order to get something moved through the Senate, because the vice president will break a tie. So I think there's a lot of concern on the Republican side as to whether they will get it through. You have multiple factions in the Republican side and also on proposals. And so some of this is, I think, could stall ACA from moving through in a timely fashion. The bill must then get CBO, which is Congressional Budget Office review, and it's proposed that it will save $133 billion, the same as the House bill. So, and then when a bill gets through the Senate or comes out of the Senate, you can bet that they'll be different, so they'll have to caucus together and iron out the differences between them. The Senate and House reconciliation could take some significant time, and Congress is scheduled to adjourn on July 28th for about 5 weeks. So when you take all those factors and kind of stir them in the cauldron, as we heard on an AICPA tax update the other day, it is could be suspect that we may have true tax reform and also the ACA by the end of this year. With all of that in mind, Gene shared the following regarding tax reform. So I think you'll find this video clip quite interesting.
These are all the things that Trump proposed in his tax reform plan. I'm not going to say they're all going to happen, but they're up there to happen. A 35% top individual rate. The biggie for all of us is this corporate rate thing. That's a big deal. All of our rates, I won't get taxed at an individual rate. It'll pass through and I get taxed at either a 15 to 20% corporate rate. It could be a little bit higher depending on how negotiations go, but still less than the top individual rate. 0 to 20% top capital gains rate. That 3.8% Obamacare tax keeps going back and forth whether they'll eliminate it or not. Eliminating estate taxes altogether. Don't get too excited about that. It affects like not-for-naught people in this country. And by the way, they've eliminated the estate tax 11 times in U.S. history. You know, they eliminate it and then it comes back again. This is big for some states if you have high state taxes, right? Sound familiar? And then you take a deduction for that. Well, they're eliminating that deduction of state taxes. They're going to keep the mortgage interest, charitable child care deductions, a $12,000 standard deduction, $24,000 for a couple. That's what's being proposed. The idea is to simplify the whole process and make it easier for people just to they just take the standard deduction, they don't itemize. That border adjustment tax, you might have heard about that before. I don't think it's going to have much legs. The whole border adjustment tax thing was Trump likes American companies that hire American workers that make their products in America and then sell them wherever they want to sell them. He does not like non-American companies that make their products outside of America with non-American workers and then sell it into America. So they were talking for a while about having this sort of basically border adjustment tax that would have an extra tax on companies that did that. But right now, it's a complicated tax, and I don't think it's going to happen. Obamacare repeal is also going to have a big impact on this because they can't use the $133 billion in savings from Obamacare. Then that has an impact on where these rates are going to go.
As things emerge in Washington on the ACA, we will provide updates as they become available.
Thanks, Ralph. Several of us had the opportunity to, in conjunction with the AICPA Spring Council meeting in May, visit several of our New Jersey legislators in their Hill offices. Ed accompanied me on several of the visits and said, why don't you take us through some of there were 4 main issues that we spoke to them on.
Sure. So the Hill visits are really an interesting process where we in groups go visit legislators. This is probably one of the best organized and informative campaigns that I can imagine for our legislators. We go in teams to visit the legislators with talking points on the key issues that the AICPA has identified on a national level. And we here in New Jersey visit our New Jersey legislative offices in Washington. The amount of preparation, detailed preparation, talking points, background material that were provided during the council meeting in preparation for the Hill visits is extraordinary. So our time is limited with the legislators or their aides, but we walk in there fully equipped to address the issues. There were 4 that we were prepared to talk to. We have a limited amount of time, so we focus on giving these talking points to the aides. The one thing I'll tell you in advance, and then I'll get to the 4 points, is if occasionally you will speak to the legislator, but more often it's one of the aides. They are attentive, they're listening, they're interested, and probably most importantly, it's clear to me anyway that we have a seat at the table and they're listening to us. Some of the topics we talked about, particularly the technical tax topics, they wanted to follow up with us when tax reform comes around to speak to us about being sure they understand what's coming down the pike. So if nothing else, this was a bridge to say we are a resource for you as you navigate legislation coming down the pike. So the 4 things that we were focused on given the time constraints, one was workforce mobility, which seeks to simplify state income tax reporting and withholding rules for employees who sometimes work outside their home states. This bill was passed by the U.S. House on just this past week on June 20th and now is on its way to the Senate. I think it's a good bill for us in New Jersey in particular because of where we are and the people in our state that work either in Philly or in New York City. The second topic, modernization of the IRS, which seeks to improve and modernize the IRS customer services operation. Wasn't a particular hard sell. I think they understood that. What we did talk about was there is a return on investment to the IRS by improving their systems, that perhaps compliance and collections can be improved by spending more money on modernization. That's a tough sell, but I think there's a business case for it. The third was tax reform, and nobody there was really in a position to know what to do since everything was unclear other than the one-page summary from the administration. But what we did establish, or what we provided them, was the AICPA's thought leadership on tax policy and tax reform and tax simplification. And we did add, in some cases, clarity to misconceptions about what tax simplification meant and how it ultimately affects the broad constituency. And the last topic was the fiscal state of the nation resolution, which would require the Comptroller General to give a presentation to the joint session of Congress on the GAO's audited federal financial statements, together with an analysis of the U.S. financial position and condition, like presenting a financial statements to our clients. How are we doing? And while we know what we budgeted at the start, how are we doing now? So those were the 4 topics on the Hill visits. Other things going on now, the PTIN fees. Some good news for tax preparers. A federal court has ruled that the IRS cannot charge a fee for using preparer tax identification numbers known as PTINs. And after being temporarily shut down because of this controversy, the PTIN registration is now back up and running. I think it just opened up this week without any fees being charged. Moving on, the AICPA has done a firm survey, CPA firm survey. It's done through the PCPS. And the results of the firm survey, there were top issues that we're all facing. You see the chart of those. And the top issues facing this year, the most important, is for finding and retaining staff, which is the good news and bad news. The good news is our services are in great demand. The bad news is we have to make sure we can get the staff to service our clients and those needs. Other common top issues include succession planning, acquisition of new clients, workload compression, keeping up with tax law complexity, and it's broken down by size of firm to address the needs and issues facing the smaller firms in the country. The AICPA, I'm sure, will listen to that and take action.
Thanks, Ed.
So there's also a survey that AICPA conducted, an economic survey, and from the industry side of things, the AICPA's latest economic outlook survey shows that business executives have slightly tempered their optimism on the economy. 64% of the CEOs and CFOs and controllers surveyed expressed optimism about the 12-month outlook for the economy, and that's a little bit down from 69% the first quarter of 2017.
Thanks, Ralph. Well, that concludes today's broadcast. We thank you for tuning in. If you have a colleague who missed today's broadcast, we will be replaying it twice for CPE credit on June 29th at 2 p.m. and July 6th at 12 p.m. You can register online at njcpa.org/webinar. And our next edition of Issues Watch will take place live at December 15th at 9 a.m. And Ed will be joining us again for that broadcast, and I'd like to take this opportunity to thank Ed today for his great input. In the meantime, please feel free to check njcpa.org or NJCPA Pulse and the open forum for updates on any and all the topics we discussed today. Remember to follow each one of us on Twitter. And we close today's broadcast with our year in review video. Thank you.